Good afternoon. My name is Rob Livson. I'm one of the VPs of Business Development at Sales here at Lightspeed Trading. We're very happy to have everyone join us today for our webinar. Today's topic is understanding margin rules and requirements. We always try to provide a lot of different topics and information to give our traders and account holders as much education as we possibly can in the form of different webinar topics. We do a lot of analysis, strategies, but also platform configuration, platform questions, and just general information. So today we want to just provide some general rules for margin and the understanding of what margin is and on how it's used for a leverage account and the different requirements used and some of the margin calls that can be created. So we'll go over a lot of general information. Certainly, if you do have questions, we'll have some time at the end to go over some specific questions if you have it, but you can always call or email us as well. We will need to just do a quick disclaimer here. This presentation is for informational purposes only. Nothing presented today should be construed as investment advice or a recommendation to buy, sell, or hold any specific securities. Since we don't know everyone's investment objectives or risk tolerance, we are not endorsing any specific trading strategies. Lightspeed Trading LLC, Lightspeed is not affiliated with any of our service providers. Data, information, and material is provided for informational and educational purposes only. The content should not be construed as an offer, solicitation, or recommendation to buy or sell securities. Any investment decisions made by the user through any such content is solely based on the user's independent analysis, taking into consideration your financial circumstances, investment objectives, and risk tolerance. Lightspeed does not endorse, offer, recommend any of the services provided by any of our service providers, and any service used to execute any trading strategies are solely based on the independent analysis of the user. Okay, great, thank you. And away we go here. So, what is margin? Today's topic. Margin is basically allowing a trader or investor to borrow funds to trade securities in the secondary equity, options, and futures markets. Margin accounts can be used to buy, sell, and short sell securities. The amount of money that can be borrowed in terms are governed by Federal Reserve, Securities and Exchange Commission, and the Federal Industry Regulatory Authority, FINRA, and Lightspeed Trading. So there are certain industry requirements that can be used, and then Lightspeed can also apply some of their own additional requirements on top of that. To be considered for a margin account, you must apply at the account opening, complete our margin application agreement. The account must maintain at least $2,000 in equity through the deposit of cash or marginal securities. Lightspeed does have a increased margin requirement just for opening an account. Our Lightspeed Trader platform and a day trading account that does have a $25,000 requirement. So a pattern day trading account, that is an industry requirement. FINRA has instituted a pattern day trading rule and requirement that limits day trading accounts under $25,000 in account equity. If your account is non-PDT, non-pattern day trading, your account is limited to 3 intraday trades in any 5-day rolling period. This is a rolling 5-day period and not a week-by-week calculation. So for example, if you log in a trade on Wednesday, the number of day trades will be calculated based on the activity of previous Tuesday, Monday, Friday, Thursday, with the present day as the 5th day. It doesn't start Monday through Friday. If you start trading on Friday, 3 trades, and then you trade on Monday as a 4th, that's still going to be within that 5-day rolling period. So it's not just a weekly calculation, it's counting back every past 5 trading days to determine how many day trades you have made. We calculate the number of day trades based on opening transactions. For example, if you buy 100 shares and then bought another 100 shares 1 hour later and then sold the 200 shares in one execution, that's considered 2 day trades. You open 2 separate 100 share orders. Even though you sold it once, that's considered 2 day trades. On the flip side, if you bought 200 shares and then sold 100 shares and then an hour later sold that other 100 shares, that is only considered 1 day trade, since it was 1 opening transaction, 2 closing transactions. We determine the calculation based on opening transactions. You can also view the FINRA website for these requirements. So they're not Lightspeed requirements. These are industry requirements. You'd find them across industry wide. You can go to www.finra.org, and then it's investors, day trading margin requirements, no rules. You can see the full regulatory authority regulations and the information here. So certainly if you want to look up and read more about the requirements and what the rules are, check out the FINRA website. There's a lot of information for investors and protection for the investors. So you certainly want to know the risks and rules involved with margin and make sure you're able to be suitable to take on a margin account and have the risk tolerance to perform a margin trading strategy as well. Okay, I'll just pause here for 1 second if we have just any general questions on the PDT rules or the requirement for the 25,000. Okay, looks like we're okay here. So what we allow for would be a intraday margin requirement, and you can have a 4 times buying power. When you do apply for an account here at Lightspeed, you can qualify automatically for a full margin day trading account. It's not designated as a pattern day trading account, but you do get your 4 times margin. When you do execute the 4 day trades in any 5-day period, if you're above or below 25,000, the account is designated as a pattern day trading account. At that time, you do need to maintain the $25,000 balance in the account, or the account would be restricted from opening transactions. And it is a mixture of cash or positions. We do also offer cash accounts. You don't need to be on margin or have additional leverage. You can have a cash account. There are certain rules involved with cash accounts as well for settlement cycles, the ability to have available funds for trading, and the permission to short sell securities is not allowed in cash accounts. So there are different requirements involved if you are a cash account versus margin, and if you are a PDT or non-PDT. Okay, so what I want to do today is basically show the different requirements and the buying power calculations based off of a margin account. So the examples we're going to use is going to be based off of a buying power 4 times, and it's going to be off of the account equity balance of 25,000. So when you have your $25,000 requirement, you can have 4 times intraday buying power up to $100,000 of marginable securities. And then you can have 2 times for overnight buying power as well. Now, marginable securities, how is that exactly defined? Well, standard margin would be 25%. These are your standard equities, something like SPY or Apple or Tesla, any of those stocks you see in the Dow Jones or the NASDAQ, and a lot of the standard stocks. Now, there are higher requirements for ETFs. You can see we also indicate this on the Lightspeed Level 2 window. If you see in the upper right-hand corner of this SPY 25%, that's indicating the margin requirement. So I can purchase $100,000 of SPY. Now you can see UVXY has a higher requirement. This is a futures ETF. It's leveraged. So you can see it has a 90% requirement. So what that means is if I have $25,000, I can have 90% requirement. So I always need to have 90% of the transaction of the market value of the trade that I'm taking in comparison to 25%. Then also, if a stock is under $3, like this one here, TEAR, it's under $1, that's 100% requirement. There's no leverage provided for this type of security. So also, certain volatile securities can always be increased at any time. if our clearing firm or our brokerage firm decide to to increase these requirements. So I can pause my slideshow here and give some additional requirements here and some examples. Let me just make sure, can everyone see my trading platform here as well? Pattern day trading requirements do not relate to where the stock trades, where your account is held. It's always U.S. exchange requirements. So those are absolutely determined by the SEC and FINRA here. So you can use a margin account and not have to borrow any securities. That's certainly available, but the leverage is extended to you at any time. So you can see, if I go to, let's say, FAS, you can see it's a 3 times leverage, 90%. Same thing, FAZ, 90%. If I look at my standard Apple, anything else, you can see in the upper right-hand corner, it's 25%. So the different types of securities will have different margin requirements. So I'm going to show some different orders and then show the different margin requirements that would be applied for each order and show how the different requirements. So 90%, instead of receiving a 4 times leverage, for example, 25% would mean I can do up to $100,000 of that security. 25% of 100,000 is my 25% requirement. 90% means I'm only able to have leverage 90% of the full market value of that transaction. So it's only slightly leveraged. You only get to borrow a little bit compared to the other transaction. So I'll show you some examples as we go here. Hopefully it'll get a little more clear here as well. So it's not exactly borrowing 10%, but I'll show you the difference here shortly. I have a couple slides which will hopefully show that off a little bit. So we see here is GE, and I have 100 shares in here. If I place the order for GE, 100 times the current price in my slide here, 1857, we'll say. That was the bid here, 1857 in market value. Now you can see the BP requirement is my full 1857. So even though that's the full market value of my position, my buying power is a 4 times multiple. So you can see I'm getting 25% of my buying power, but it's based on a 4-time multiple. So that essentially equates to only an equity value of 25% of my $1,800. So instead of reducing my $25,000 balance by 1857, it's reducing my $100,000 buying power by 1857. So here's an example here, GE. So we can see here in my account summary window, I have an equity of 25,000 and buying power of 100,000. So even we'll do 1,000. So we can see here $18,000 is the total transaction cost. But since my buying power is $100,000, that's why I'm able to only have to take 18,000 as a requirement. It's not taking 25% of the market value since I have an inflated buying power number. So if we see here on my account summary window, it reduces my buying power by the $18,000, giving me a remaining BP of $81,000. So essentially 81,000 divided by 4 still leaves me with over 20,000 in equity available, which would equal to times 4 for my buying power. So our system provides a multiple on your buying power. So your margin requirement is based on your multiple as well. Now it's very easy to cancel my orders in Lightspeed. So we can go through here some of the platforms. I just have to click on my X here, confirm cancel, yes, and my order is out here as well. So, okay, so here's an example of a security that has 100% requirement. I'm buying 100 shares in this example, if you see here. Oops, sorry. Okay, so sorry about that. 100 shares times 142 is 140 market value. But if you see here, my BP requirement is 4 times that amount because I'm on a 4 times multiple in the platform. So since I have a buying power of 100,000, it's taking out 4 times the requirement for this position. If it didn't, then let's say it only took out the $142 out of my $100,000 buying power, that would give me way too much stock at a leverage. This one is not leveraged, so I could only purchase $25,000 worth of this security. So let's try to show you an example of this again so you can kind of see. If I was to buy 1,000 shares of this, let's put this somewhere below the market, you can see my 1,000 shares, even though it's only $1,200 in market value, the BP requirement is taking out 4 times. So essentially, I can only buy $25,000 worth of this security since it's non-marginable. However, the system has to take out the $100,000 in buying power to equal $25,000 in the account balance, the equity. So that's the difference of the multiple of the buying power. And why sometimes people will say, oh, how come it's taking out 4 times the amount for my order? Because this one's non-marginable versus the 25% requirement, which is only taking out the 1-to-1 ratio based on the 4 times buying power. Does that make sense? Do you have questions on there? Can I explain that a little better? So that's from the 4 times BP. So instead of just taking out $1,000, it's taking out 1,000 times 4, since my buying power is times 4. So the margin requirement of the security will determine what the buying power ratio will be taking out. If you don't want a margin account, these are things you can update your settings for as well. Otherwise, you would just have to put your own risk limits on. If you don't want to exceed your equity or your available equity and not go on margin, you can make those type of risk settings yourself as well. The software does calculate on the inside bid or offer. That is correct. That is because in case you do have to modify the order, it's already taking out that requirement. So even though you're putting an order below the bid or offer, it's always going to take out at the current market price to account for the current market value of the stock. So that is how the software operates for risk, to avoid you having a stock go in a lot lower and then you modifying it to allow you to then exceed your buying power. So that is how the software operates. Okay, so now let's show one of the 90% requirement. So if it's 90% requirement, you want to see how much I can actually hold before I'm exceeding my buying power. Essentially, you'd have to do the formula 25,000 divided by 90%, would allow me to hold 27,700 in market value. Anything else would be rejected based on buying power. So you can see here, 1,000 shares, even though it's $58,000 in market value, it's taking out 212 based on the margin requirement. And that will get rejected based on cannot exceed buying power. So I can only hold $27,000. So the market value, 59.34 divided by 27 is the amount I can. Yes, Terry, I understand, but I don't want to get filled on some of these large orders, so I am trying to just put these orders a little farther away from the market. So 500 shares would be too much. That's 500 times 58. That's a market value of 29,000. That's more than I could hold. So 400 shares would be what I'd be allowed. In between 400 to 500 shares would be allowed with my 90% requirement. So the formula really would be your equity divided by the margin. So let's say I have 25,000 and it's a 25%. That's why you get the 100,000 in BP. 25,000 by the 90% would be the 27,000 available. So we could see here as well, I have my 100%. It's going to take out 5,800 in market value. Four times. Okay, if this did get a little confusing, certainly you can always call or email if you have some questions. Be happy to discuss, some of the ways the system calculates these buying power figures and what is available and the best way for you to determine that as well. Okay, so I want to go on to just some other examples here as well. So here's just an example of an option order. Options requirement is 100%, and just like the other calculation, it's going to take out 4 times the actual requirement based on my 4 times multiple. So you can see the requirement for the option contract, it's the price times 100 times the number of contracts. So my price is 24 cents. One contract times 100 is $24. The system will take out $96 to account for your buying power multiple. You can see that on my option order confirmation. Buying one at 24 cents, but the buying power requirement is going to be 4 times the cash requirement since I have a 4 times buying power account. Now, if I have a covered call, its requirement is only taking out on the equity leg, not the option here. So just like buying my 100 shares of GE, it's taking out the 1825 and it's not applying anything additional for my actual call contract that I'm selling. So the requirement is only based on the equity leg here. Debit spread, quickly here. I didn't want to go into too much in the complex options, but I just wanted to throw an example here. Debit spread, the net debit is 14 cents. I'm buying at 22 cents. I'm selling at 8 cents. So that's I'm paying 14 times 100 times the amount of contracts, 1. So 14 is my net debit. and my multiple is 4 times, so it's taking out $56 of my buying power since it's the 4 times multiple system. If it was a cash account or non-margin, it would the cost of that spread would be 14, but since it's the margin, the system takes out the 4 time multiple. Okay, going to move on to margin calls here. So now that we know some of the margin calculations, we're just going to discuss some of the margin calls here. So the initial call, it's also known as a Reg T or a Fed call. This is incurred by exceeding your insufficient overnight buying power. If you are holding more stock overnight than what your account balance can maintain, the Federal Reserve Board Reg T, you can borrow up to 50% of the total purchase price of a marginable stock for initial opening transactions. Essentially, my $25,000 account, I could hold $50,000 of stock. If I exceed the $50,000, then I'm going to create that initial call. So any amount above 50,000 is going to create a call. So if I have 60,000 that I'm holding overnight, that additional 10,000 is what is created the call. So I'm going to receive a margin call for $10,000. The call can be met by a deposit of cash and the entire amount of the call, deposit of marginable eligible securities valued at 1/3 times the call, or liquidation of the margin eligible securities valued at 2 times the call. Essentially, I'd have to sell $20,000 of the stock to cover a $10,000 initial Reg T call. However, liquidation can only be used to meet the call twice during a rolling year. On the third instance, your account will be in restriction and limited to cash on hand for 90 days. Essentially, first 2 are warnings. Third strike, you will receive a restriction. The proper way to meet a Reg T call without any strikes would be a deposit of cash or securities. If the call is not met, positions will be liquidated by our trade desk to satisfy the initial call past the due date. Maintenance call. This is incurred by having account equity below the minimum maintenance requirement for open positions. Once you hold a position overnight, the margin requirement does reduce down to 25%. If you are not able to maintain this due to an account decrease in value, or let's say you've taken on additional positions and you're not able to hold the maintenance on a position, you are issued a maintenance call. In the same manner, you can deposit cash to cover the call. You can deposit margin eligible securities, or you can liquidate non-margin eligible securities equal to the amount of the call, or market appreciation. If your stock goes up and the account value goes up past what the margin requirement is, you can also meet that call. You can close the position or reduce a position without any strikes for the maintenance call. So it is different than the Reg T initial call. Essentially, so for an overnight buying power requirement, in my equity balance of $25,000, I could hold $50,000 of stock. If I have Apple and I hold, $50,000, greater than 50,000, that is what is going to create my initial Reg T call. So essentially, I can hold 300 shares overnight. That would really, be very close to my overnight buying power. If I go over that, any amount greater than 50,000 will result in a call for that amount. Now, you do also have to calculate any changes in account balance overnight. So even though my start of day balance is 25 and my start of day overnight buying power is 50,000, if I've lost money overnight or during the trading day, that will also factor into what I can hold overnight. So you do always have to consider any changes in profit or loss to determine your exact end of day overnight buying power compared to how it looked at the start of day. Day trade call, incurred by exceeding your day trade buying power. Now, our system is designed to avoid letting you go over the amount of day trading buying power, but it can occur. If you do somehow go over your buying power, the call has to be met through a deposit of cash or a deposit of margin eligible securities. This cannot be met by liquidation. It has to be met by a deposit of cash or securities. This can occur if somehow you have 100,000 in buying power, and let's say you bought 110,000 and bought and sold that throughout the day in one transaction. That will create a day trade call. System should prevent it, but it can occur. So it is always up to you to be responsible to maintain your orders and executions and know not to exceed your day trade limits as well. Equity maintenance call. This one occurs very often, happens to a lot of people. This is incurred by having a pattern day trading account, as we discussed, exceeding more than 3 day trades in any 5-day period, and your account equity falls below 25,000. You will be restricted to closing transactions only until the account equity reaches 25,000. The due date is essentially at any time. The call is met by the deposit of cash, deposit of securities, or by market appreciation. If you have existing positions in the account and your account value goes up past 25,000, you will get buying power the next day. We do have a one-time exception to reset your pattern day trading designation after a 30-day waiting period. If you are coded as a non-pattern day trading account, your account is limited to 3 day trades in any 5-day business rolling period. If at any point you make more than the 3 days in the rolling 5 days, the account is automatically recoded and subject to the minimum equity balance requirement of 25,000. So you get a one-time exception, and if that does then get reset again, you are only going to be able to have buying power and margin if you're back above 25,000. Okay, so we do have a lot of this information now posted on our website on our margin rate page here. We have a yellow checkbox here, learn about margin. You can view a lot of these definitions and terms here and some of those instructions for meeting the margin calls all in this learn about margin section. So this is another resource that we've added. And then this is also where you can view our current margin rates. Lightspeed, the starting margin rate is 7.5%, and this is an annual rate. So margin interest. Margin interest is charged based on the amount of money borrowed over your total equity. Essentially, if I have a $25,000 account, and if I hold $35,000 overnight, which is acceptable, but just like a loan, I'm borrowing $10,000 above my account balance. That portion is subject to the margin interest. So the interest rate is charged per day, annualized. So it's an annual rate broken down into a daily charge. The margin interest rates are always subject to change without notice, but we do list it on our company website. Each account is self-directed, and the margin loan is collateralized by the account's equity. So here's that example I was speaking of. The account balance, 25,000, holding overnight 35,000. The $10,000 that you are borrowing is subject to margin interest. The formula is based on the amount that you're borrowing times the margin rate times the number of days you're holding it divided by 360. Actually, this is wrong. It's divided by 360, then times the number of days. So let's just say it's 1 day. It's 10,000 times 0.075 divided by 360. So essentially, you're paying $2 per night to hold that $10,000. Margin interest is only applied if you're holding overnight. If you are day trading on margin, in and out, closing that position, there is no interest applied. So that's only an overnight calculation. Okay, so that's a lot of the basics here that I wanted to cover. So certainly let's see if you guys have some questions on either the pattern day trading rules or how the system calculates your margin or just the margin rules. And then I'd be happy to go over some of these. If anyone has questions about opening a new account with Lightspeed, we would be happy to assist you. You can contact sales@lightspeed.com, or you can call our main number, extension 3 would be the sales line. If you're on a margin account, there is no limit to the amount of trades or the market value, total market value, that you are limited to. It's at your discretion. It's your self-directed account. As long as you're staying within the overall margin requirements, you're able to execute transaction as you see fit. Some examples on the level 2 window, people are asking some of the information. The T or the E or the L, that would relate to the market availability for shorts. So if it's an L, that means a locate is required. If it's an E, that indicates it's easy to borrow, like Tesla. And if it's not, if it's a T, it's a threshold. That means then the security is not available to borrow at all. So if it is a locate required, you can request it through our short locate as well to see if something is available here. So Mark asked a question: if I have $50,000 in Apple and hold it overnight with a $25,000 account, if it grows to $55,000 overnight, do I owe the next day with a margin call? No, you do not. As long as your initial requirement was correct, 25,000 times 2 for 50,000, that's your initial requirement. If the stock grows in appreciation afterwards, you would not need to deposit additional funds in there. Market appreciation and the lowering from the initial maintenance to your standard maintenance will be reduced. So you would not need to, as your position grows, as long as it's past the overnight 50% requirement, you're not going to have to deposit. Now, if you were holding 25,000 in account balance and 50,000 in Apple, and the stock went down 5,000, that would create a margin call since you're no longer holding that requirement. The system won't currently show your overnight buying power. It is something we're looking to add, but it is something you should learn how to calculate on your own just to make sure. So, but that figure is not going to show currently on the system. You would not be able to change your settings for margin or cash on a per trade basis. If you're set to a margin account, all of your trades will be in margin. So we do have a large easy to borrow list as well. I was trying to find a stock that was not easily available today, so I could show you how the short locate works as well. Let's see if I could somehow find a stock. I'm not sure if anyone has any stocks that they saw people were shorting today, or was it not available somewhere else. So RAKU. So that was not available on our standard locate, but through our short locate requester, I can borrow that stock. So it is available. There is a fee available to it. I have to either agree to that fee or just reject it. So I would then be able to sell short 100 shares or more, but I would have to pay a pre-borrow fee. So we do have an additional way to access a short that would not normally be available from our clearing firm. Certain ones are available, depends on the volatility and what is. So DCIX is currently a threshold that was not available at all for us today. That one has been very low float, very volatile, so that one was not available. So it always does depend on the situation of the security, the trading, and what's outstanding as well. The CB indicates a circuit breaker, which is essentially a short sale restriction. You could only sell short on an uptick when it's in a CB designation. That's designated by the exchanges. This one was very volatile today as well. I believe it was available earlier in the day, and then the price may have changed. So it was not available through our free locate at the end of the day, but you still could have submitted it as a paid pre-borrow fee. Now, sometimes you don't want to pay $5 for 100 shares, but then there's also the opportunity. You can see this thing had a high of $10, then went down to $7. So sometimes paying that $5 could have led you to be able to short something that did move a lot today. So, certainly you have the choice to determine what is a price you're willing to pay. And if you think the trade setup is there, then you certainly can at least have the option to get into that on the short side. Nicolette asks how many days you're given to cover a stock. It certainly depends on the type of margin call you have. The initial call is 5 days. The maintenance call is 3 days. So it depends on the situation. If anyone wants to request a demo of the Lightspeed software, you can do that through the Lightspeed website. Just have to go to any page. You can see try a demo on the upper right-hand corner. This will allow you to request a demo of the Lightspeed software or even some of our other platforms as well. And you can test out the software, see how you can configure it. If you want to look at our commissions here, for anyone who's new to Lightspeed here, our standard rates start at 0.0045. They go lower based on activity. Per trade rate would start at 450 as a flat ticket rate. And then you can also have to determine the different routing fees. We offer many different routing venues, but you can also qualify for add liquidity as well. The minimum funding requirement for the Lightspeed software is $25,000. We do offer a web trader version with mobile access for $10,000, but our advanced level 2 platform does require $25,000. Adding liquidity is there's different ways of an order is flagged as either adding or taking liquidity. Essentially, a market order is taking liquidity, just like a marketable limit order. There's shares out there on the market. For example, an LEDS at 780. If I do a market order to buy, I'm buying these shares at 780, just like if I was to place a limit order to buy at 780. That would be taking the shares that are there. That receives a routing fee. However, if I place an order to sell above the current offer, that means my order is going to add to the book. My shares are going to post to the market. That's going to be adding liquidity. So I am putting additional shares out there as comparison to just taking someone else's order. So a market order or a marketable limit would be a take order and receive a routing fee. Adding liquidity, which would be selling at the offer or higher, buying at the bid or lower, would qualify for adding liquidity, and you'd qualify for a rebate through the different exchange routes. We do have some webinars on here as well, which define some of the order routing and liquidity rebates. So that's a good resource to look at as well. So certainly take a look at that webinar. It will give you an idea of the various routing destinations and utilizing those rebates as well. Please also keep in mind there are different margin requirements. Sometimes if a stock turns volatile, there can be an increase in margin on a margin requirement at any time. This is determined by our clearing firm or Lightspeed. If you are concentrated in a position, we can issue a concentration call to have you reduce your position if you're just over concentrated. Additionally, if you're short a security, which is below $5, there's a different formula. Overnight, it's either the standard maintenance, it's 30%, or $2.50 per share, whichever is greater. So there are some scenarios as well. So there are a lot of different ways that you have to be aware of what you're holding, what you're able to hold, and you can always shoot us an email if you want to ask us what it's about. So certainly if you do have questions, you could call our main number. The line 3 is the sales line. Line 1, extension 1 is our general service line. We'd be happy to help you. You can always use our contact us form as well, or just email us. And if you're looking to open an account, it's very easy online. You just go to the open account and go through the application. It's less than 10 minutes, and then you can choose your platform, your account type, and get the account going very easily. But if you do have questions, we'd be happy to help you walk through the demo and any other account information. Okay, any other questions I could help you with? Hopefully I did explain some of the margin requirements and how it's calculated. If I did get a little confusing there, I apologize. There are a lot of scenarios, but of course we'd be happy to help explain this to you a little further. But I'd be more than happy to go over anyone's specific questions. If you want to call in tomorrow or throughout the week or at any time, send an email in to me directly, rlifson@lightspeed.com or sales@lightspeed.com. I know Craig asked a question about some margin requirement on his account. I'd be happy to go over that with you, Craig. You can easily move your account from an existing brokerage firm like Scottrade or E-Trade. Once you open the account with Lightspeed, you can request a direct wire transfer if it's just cash. If it's positions you're looking to move over, you can do a partial or full account transfer to transfer over cash and any positions that you want without having to liquidate. So once your account is open, you can easily fund the account in a variety of methods, including a check deposit, a online ACH transfer. The account transfer Lightspeed would handle, you would complete our forms. If it's a wire transfer, you would have to contact your bank or brokerage, provide them with the instructions, and they would initiate the wire transfer. But we would provide you with the instructions. Nicolette asks if there's a limit on how long a trader can keep a stock short. The only limit would be if you're unable to hold it due to margin requirements, or if there's a buy-in on a short. So a buy-in can occur at any time. We don't have any notification of this. This can be anywhere from T3 to T1. We try to let you know as soon as possible if we receive a possible buy-in notice as well. That means you do have to cover that position. But if you are able to hold it and maintain the margin requirement, there's no buy-in, you can hold that position as long as you see fit. So certain conditions require it to be covered, and if the account can maintain it, there is no requirement to cover. ZS one more time, the 4 times calculation. So essentially, you can see my equity is 25,000, my buying power is 100,000. So buy-ins are not that common. It varies on the symbol and how active that symbol is and what float is out there. So we don't see it very often, but it certainly does occur from time to time. So I don't really have a answer for that. The account application will ask you if you are looking for a margin account or a cash account. So it will, on your second step here on your account application, it will ask you if you want that cash or margin. 25%. So my equity, my account balance is 25,000. I could hold buying power of $100,000. So if I had, let's say, BAC, which is 26, if I were to purchase 1,000 shares at 26.30, we can see the requirement is 26,000. So essentially, I can buy basically 4 times that amount. So you see that requirement is 107,000. Because that's the total market value of that transaction is 107,000. So you can see my account balance is 25,000, but I could purchase 100,000 in securities. So that is where that 4 times requirement comes from. So that 100,000 essentially equates to 26,000 in market value in equity, but 100,000 in my buying power. A buy-in can occur at any time. It will not matter what your cost would be or the current market price. So you would be required to cover that position at a loss if a buy-in is required. So that is always out there for any clearing firm or any brokerage. A buy-in can always occur. The initial demo that you receive from Lightspeed is limited. If someone does want to request a live demo for testing some of the functionality, you could always email me, sales@lightspeed.com, and request a live demo. Okay, so just as an example here, let's just 1,000 shares. The price is 18,000. So that would be $18,000 in market value. So what do you think my buying power requirement is going to be if I queue this order up based on my 100,000 buying power? Right, so it would be 18,000. So essentially, I could buy up to 100,000 of this stock. So the 18,000 is the requirement there, which would be my equity of 18,000 as well. The short request window, it's available in the new menu. If it's not enabled, you can email us and we can then send you the terms, and then you can have it enabled. So it is something that's by request. You just have to email for the short request window, send it to service@lightspeed.com, ask for the short request, we'll send you the terms, and you can then have that enabled. Well, you would not pay margin interest on 100% security since it's not marginable. You can't hold it on margin, so there would not be any interest on that particular security. If I could only hold $25,000 of a non-marginal security, I'm not able to borrow anything on that, so I would not be charged margin interest. Other than the short request, you can just email shorts@lightspeed.com for a free locate. That would then get delivered to your platform and enabled for shorting if it's available. So we have a free locate through email, and then we have the paid pre-borrow fee through the software. Jay asks if he opens with 25,000 but then initially loses 750, does he have to deposit additional funds before he could take on additional positions? It's based on your start of day balance. So throughout that day, you can continue to trade. However, if your start of day balance tomorrow is below 25,000, then you would have to send in additional funds to be able to have buying power. So it wouldn't automatically cut you off on your first trade, but the next day it would base off of your starting daily balance. So you can tell if a stock is shortable. The upper right hand corner, you can see the green E indicates it's easy to borrow, and another security, if it's an L, indicates it's not easy to borrow, but a locate is required. So you can either use our short request window or email our trade desk. And then we have the third designation, which is the threshold, the T, and that is not available to borrow at all for the day throughout the trade desk or through the short request. If I try to locate it, it will just tell me it's not eligible since it's threshold. You can set up an ACH through the website to send in money or even withdraw money for no charge. Otherwise, it would be a wire transfer or send in a check. So there's a couple of different ways you could fund the account, but you can set up the ACH through the website as well. Okay, guys, I thank you a lot for attending. Great questions here. I'm glad people were interested. Hopefully I was able to get some of the information across to you, but if I wasn't, certainly let me know. I'll be happy to go over anything personally or and some specific questions about your account, your margin requirements. If you did create a call, we can see why and help you learn and try to avoid some of these calls and stay within your margin requirements. This will be posted in the next couple of days, and then keep an eye out for future webinars. We're happy to have them all the time. If you have any suggestions for us, certainly we're open as far as software or webinars or anything else we can try to do to increase our service for you. But I thank you guys. Certainly reach out to me, rlifson@lightspeed.com or sales@lightspeed.com, and hopefully I'll talk to you guys and be happy to help. So have a great night and happy holidays, and take care, everyone. Thank you very much.